Good morning. It is Ed. So, this video message is about some of the headlines that we're seeing right now and what you should be concerned about and if you shouldn't be concerned about it. And by the way, I'm a wide open door. So if you have questions, you read about something, you want to know about it, shoot me an email and say, is this something I should be concerned about? Because what I don't want you doing is worrying, and I don't want you to think that we're not on top of what's happening around the world. And that's probably a good segue to around the world, because everything that happens everywhere around the world impacts us. Because remember, a majority of our companies that drive our stock prices in the United States actually get the majority of their growth in earnings from outside of our borders. So if you really study these companies, they're not growing and expanding in the United States, they're growing and expanding from business outside the U.S., but that does not include our financial services stocks, or mainly our banks. But remember that's a very key point. So in China is concerning me quite a bit. You're seeing a lot of odd numbers coming out of that. Last night, I'm sure you didn't see it, but the flash, I think the price producer index or the manufacturing index in China was down again. I know you probably watched that and said, oh my goodness, China is slowing. It is slowing, and their prices are rising. That's concerning because we do, have a big trading relationship with China. So that's something to be concerned about. And how would that impact us? It would impact us if our earnings are attacked as a result of that. So keep an eye on that. Other things that are happening is exactly that, earnings. Stock prices move 6 to 9 months ahead of economic data or their earnings being released. So stocks have already moved up in anticipation of what those numbers are going to be. If those numbers don't come in and match what the expectations were, we could see those stock prices start to fall, and you're starting to see it now. Overall, stock earnings are starting to come in okay, but nowhere close to what people had hoped. That's why you're seeing stock prices start to fall off a bit. All right, we've got to keep an eye on that because this economy and the world economy is not in good shape, and those earnings expectations might not be met. This is a big year for that. This could be this could be the story of 2014, our earnings coming back. But the real story, unfortunately, I do believe, is going to be rising yields and how that's going to impact bond prices. So when interest rates drop, okay, the value of bonds go up. Now, these are interest rate sensitive bonds. So let's separate them. You have government bonds and municipal bonds, and the only thing that really impacts those, except for about 1 or 2% of the situations, the only thing that really impacts those are interest rates. Okay, so when you're looking at AAA rated bonds, AA rated bonds, single A rated bonds, the only impact there really is truly going to be interest rates. And if interest rates drop, the price of those bonds go up. Conversely, I don't know if that means conversely, but conversely, when interest rates start to rise, you see those prices come down. Bond funds are a disaster, and if you have any of them anywhere, get out of them, with the exception of high yield bonds. They're a little bit of a different animal. They kind of trade like equities, okay? So remember that. And that's really about it. And again, I continue to watch. I love watching all these people continue to say that when the Fed stops printing money, stock prices will drop. And I continue to say, and have been doing this for about 1.5 years, 2 years, saying there's just no truth to that, and there is no truth. So don't get sucked into that. You might see a short-term move, but the Fed printing has no impact. And I challenge people all the time. I talk to strategists, I talk to pundits that go on television like I do, and I say, how does that work? Explain to me how the Fed printing money, buying bonds off the books of banks, enters the market. How is it that that's helping stock prices? And if you ask that question, they'll say, well, blah, 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 blah. And that's all it sounds like, just a bunch of nonsense. So when you start hearing those headlines, ignore them. There's no connection. All right? What do I expect to have happen this next week? No idea. State of the Union address, we're going to hear a lot about the economy. We're going to hear a lot about bigger government. And I think you know where I stand on that. But right now, you know what? We don't look week by week. The genius of investing is recognizing the direction of trends. The trend has been stock prices going higher. But let's watch those earnings, okay? I'm concerned about them. Take care.